Hi there. Very good morning to all our viewers who've joining us live on this broadcast. You're watching Opening Bell with me, Stacy Pereira. And as the drill goes, I'm here to take you through all those news and cues that will go on to impact your trading day. So let me quickly give you a recap. Well, we did see the Nifty 50 sustain that up trend for about 5 days now on a trot and reaching nearly that critical hurdle of 22,600 despite those corrections that we've seen here and there. And it was a bank Nifty that also showed some bit of pressure for the second session. That one really correcting much more, but overall the trend does remain positive. Despite that elevated volatility, the market is expected to continue this momentum on its journey upwards, we could say, in the coming sessions, along with, of course, those intermittent consolidations that we could expect. But can we revisit those record high levels anytime soon? We'll be talking about all that and more, but before that, let me take you through all the top headlines. Dow closed about 200 points lower in its worst day this month after the Fed reignited inflation worries. Nvidia tops that $1,000 per share mark in extended trading hours after its Q1 earnings beat street estimates. And markets in the Asia-Pacific region opened mixed after that weak handover from Wall Street. The Bank of Korea has left rates unchanged at 3.5%. The GIFT Nifty, though, is implying a subdued start for the Indian markets. And oil prices have dipped for the third consecutive session, followed by the Fed minutes. Brent is hovering around levels of $82 a barrel, whereas gold is seeing some profit taking after hitting a record high as Fed rate cuts now could cool off. A bonanza for the union government as RBI has announced a record 2.11 lakh crore rupees as surplus dividend for FY24. That's double the government's budgeted dividend at almost 140% more than the FY23 payout. The central bank also increases the contingency buffer to 6.5% for its balance sheet. An FMCG major ITC is expected to report a soft fourth quarter with cigarette volumes expected at somewhere around 0 to 1%. From the broader markets, InterGlobe Aviation, Mamaearth, Honasa Consumers as well as Page Industries will be reporting its Q4 numbers. We have just about 10 minutes before we hit the opening bell there to see whether we can actually revisit those highs that we were talking about or for a matter of consolidation because the global cues have been rather weak. But let me also take you quickly through some of the F&O cues that you need to be watching out for and what the trade setup really is like. Now, 23,000 strike is continuing to own that maximum call open interest, whereas on the put side, we're seeing the maximum open interest that was seen at this time at 22,000 strike and not the 22,500 that was seen in all through this week, in fact. So the Nifty PCR now then currently stands, it rose to about 1.20 as of the 1.15 levels that it was in the previous session. Of course, this still is above that one mark, which means that there is more selling of put options than the call options, which is still a bullish sentiment we could expect. But in terms of the stocks that are in that F&O ban list, and now 13 stocks continue to, rate in there. We have Hindustan Copper as well as Metropolis Healthcare that have been added for today's F&O ban list, whereas the stocks that remain in the ban is Aditya Birla Capital, Balrampur Chini, Bandhan Bank, Biocon, Vodafone India, IEX. There's also India Cements, Nalco, Piramal Enterprise, PNB as well as Z Entertainment. Two stocks have been removed as of yesterday. That is GMR Airport Infrastructure as well as Granules India. And Granules will be interesting to see how that really plays out after all the other news flow that we're seeing coming in there. But in terms of where the monies are really coming, well, we did see FIIs and FPIs become net sellers once again, selling close to 686 crore rupees worth of shares yesterday, whereas DIIs did the buying. In fact, they bought shares worth of 962 crore rupees according to the provisional data. Now, if you look at the fear gauge at the India VIX index, that one has been seeing quite some swings, and in fact, it has cooled off, we could say, as of yesterday, but it still remains in that elevated level, suggesting that the bulls might really have to be cautious at least till that June 4th date that everyone is marking on the calendars. Remember, there will be some kind of correction, but at the current levels, it is around 15 to 16 levels for that market stability is where it will need to get to, but we are currently still above that 21 levels or above that 20 levels. In fact, yesterday it fell just by about 1.5%, so we are at 21.47 versus the 21.81 that it was in the previous session. But like I pointed out before, a lot of earnings that are really becoming that, making that stock specific market, and today one of the big ones to be watching out for is from FMCG side is ITC. That one will be interesting to see what we get. There's also InterGlobe Aviation, that is your Indigo parent company, as well as Honasa Consumers, that is Mamaearth. There's also Cello World from the newer stocks that have got listed. From the broader index, also Page Industries as well as Tata Investment Corporation. So those will be quite something to be tracking, but also a lot of we are going to see reactions coming in for a couple of stocks, the likes of a Paytm that came out with its numbers yesterday. Of course, that one is going to actually see that impact of those RBI curbs transfer into their Q1 results really, but nonetheless there are a couple of brokerages that have come out with reports on the same. There's Nykaa, there is a whole host of stocks that we're going to be discussing with our experts, and in fact joining me for that is Ajit Mishra. He's the Senior Vice President of Technical Research at Religare Broking. Good morning, Ajit, and always a pleasure to have you with us here at Moneycontrol. Let's talk straight off the indices, in fact, right now, because do you feel that, overall this risk reward is in terms in favor of the shorts currently, because we are seeing, touching new highs, but there is always that in 3 or 5 sessions we come back to that consolidation mode, not really able to break past that 22,500 levels, even though yesterday we did and we managed to touch that 22,600 odd levels. But is this that resistance zone that we're going to be hovering around, and how long will it persist rather?
Yeah, good morning, Stacy, and thank you for having me. And so basically, yes, you are right, because if you see from the risk reward perspective, obviously in the last 3-4 instances, we have seen that index inching towards record high zone and then witnessing profit taking and retracing nearly 3 to 4% from that area. And this time around also, we are very closer to that mark. But how it's going to be different? So we have mixed clues to react to. At one place, we are seeing that the global markets largely they are doing well. India VIX is still sustaining at 21.5 levels. At the same time, banking is slightly on the back foot. But certain index majors from the energy basket, from the IT basket, they are holding the fort. So amid all this, I feel that instead of worrying about all the other factors, 22,300. That's the make or break area, I feel, for the index. Until we break this mark, the tone is likely to remain positive, though the momentum might be missing because we have this, lack of alignment between the Nifty and the banking index. And without that, we doubt that there'll be any strong momentum in the markets. But the tone is likely to remain positive because the other index majors, they might continue to help the index to inch higher and again retest the record highs. So as of now, yes, from the current levels, the risk reward is not favorable. But if we see any intraday dip towards, let's say, 22,500 zone, then definitely one can look for fresh buying opportunity with stop at 22,400 and 22,750 to 800, the record high area as a target zone.
Right. In fact, Ajit, you did mention that, the Nifty and the Bank Nifty are working in a kind of divergence of sorts right now. At least we're seeing the Bank Nifty succumb unto some bit of pressure. So what really is the play for the Bank Nifty, and what are the components there that are really, not letting Bank Nifty also get back to those 49,000 levels or so, because it did slip back into that 47,700 odd zone. So what are the levels there for the Bank Nifty? And do you think that one should just play cautiously at this point, or is there reason to enter now on the dips?
Yeah, so for banking, I feel that until we break 48,300, one should refrain from any long trades. And downside also, though we have multiple supports around 47,400 to 47,100 zone. But until, as you mentioned, that which particular component. So it's HDFC Bank largely, which is keeping the index under pressure. We have had multiple attempts in the past also for some recovery, but couldn't sustain. So Axis, ICICI, they are largely doing their part. SBI, it's also holding strong. So, but without SDFC, making a many meaningful move, we need strong participation from the others. So, which seems unlikely. So, for a time being now, from the index perspective, at least, I feel, Nifty is a better candidate to look at on dips. And since we are playing the positive bias, going for short position on rise is something that if you are very clear about your stop losses and targets, then one can look for shorting opportunities also in the banking index. But I would suggest to refrain, because if there will be any short covering above 48,300 in the banking index, could be very sharp. So for a time being now, it's better to avoid banking and prefer Nifty for index trade.
Nifty a preferred bet compared to the bank Nifty. Do stay on with us, Ajit. Let me address a couple of stocks that will be in focus and a couple of numbers that came out yesterday. We did see Grasim Industries put out its numbers. Now the net profits came in about 15.5% higher, coming in at 2,721.8 crore rupees on a year-on-year basis. Revenues have also risen by about 12.7%, coming in at 37,727. EBITDA is up as well by about 24%. So good number there. Margins though have also risen by 15.3% versus the 13.9%. So this coming in rather positive numbers for Grasim. We also had a Power Grid that came out with its numbers, and Power Grid numbers are not, perhaps going to see the street give some bit of punishing, we would say, because the net profits are down by 3.6%, coming at 4,166.3. Revenues too are down 2.5% at 11,978. EBITDA is down 7.6%, as well as the margins have contracted to about 84.3 versus the 89%. Though the board has gone on to announce a dividend of 2.75 per share. Let me quickly get Ajit's view on Power Grid, because that's going to be quite interesting to see how power stocks are really playing out, because we have rather extremes, because even Suzlon or something on those likes came out with its numbers and the street really gave it a thumbs up, whereas you're seeing a little bit of a negative sentiment when it comes to something like a Power Grid. So how is one supposed to be playing the power sector as a whole, and what would be your picks then within the power play?
So Stacy, yes, mostly they names from the power space, be it on the financing side also, they have done exceptionally well in the recent month, and Power Grid is also trading largely in tandem with the trend. The stock's trading at the record highs, and as you mentioned that the result is slightly on the disappointing side, so it might react negatively, but the tone is not going to change until we break this 305, 310 zone. So, but yeah, from the very short term perspective, if you have any existing position from the trading point of view, 318 should be a strict stop. And if it manages to hold, then we can again see the stock inching towards the newer highs. Within the power space, we feel Tata Power, NTPC, they are the better candidates, because we have already seen the earnings means they are behind us, and Tata Power is again gradually inching towards record high. It has off late reclaimed short-term averages also, and now we are inching towards the previous swing high, which is around 460-65 area.
Yeah, Ajit, I'm going to have to, ask you to wait, and we'll get back to how we should play that. But let's address market open for you right there. Quite flat, we would say, for the Nifty 50, still managing to, keep on to those, rather oscillating between those gains and losses, we would say. So 22,590 to 22,600 is where we've been opening at. Sensex also rather flat, we would say, at this point. So pretty much that tug of war between the bulls and bears is currently on, and which is why you're seeing the benchmarks at least react to that way. Broader indices though are comfortable there. You're seeing almost 0.5% of gains coming in there for the mid cap. Even the small cap index index about 0.3% higher. So that's where perhaps, you're seeing more momentum or the positive bias coming in for the broader indices. In fact, Bank Nifty also seeing good positive, pressures this time around. So you're seeing the Bank Nifty pretty much break that two session of drag that it was in, that one coming in the positive now. The Nifty IT index also seeing some good gains. So IT index about 0.1% higher, so we will see components of those that are perhaps pushing even the benchmarks higher. Nifty Pharma, now that index is almost 1% down, so you're seeing perhaps some profit booking that is taking place within the pharma pack, because most of your gainers in fact yesterday came from those, and even from the FMCG and consumer basket. So today you do have ITC that will be putting out its numbers, and perhaps that one having a lot of people's interest there. So both the FMCG and consumer basket there in the positive, whereas metals, this one again quite interesting display, because just 2 days back metals was the biggest gainer, about 4% of gains that it saw. Today about 1.5% down, we would say. So the auto index also rather flat at this point, but metals and pharma is going to be something interesting that we need to talk about in detail. The realty sector also there positive for this session, at least opening positive for now. Let's also address the components that are making these rallies for these indices. In fact, your top gainers on the screen, you do have ONGC, SBI, IndusInd Bank in the positive, BPCL, Axis Bank, Hero MotoCorp. So almost 2-3 names there from the banking pack. ICICI Bank as well, all in the positive. Maruti Suzuki as well as HCL Tech, all confirming those gains for the markets. Whereas on the laggard side, you do have Power Grid then, like we were just talking about, that one seeing some bit of pressure after its earnings. Sun Pharma as well reacting to the earnings, so that one another in the negative. Hindalco, now it's been the second session after being a top gainer that it is in the negative. JSW Steel, Tata Steel, Grasim, all of these components now in your laggard list. So a lot of those metal names as well as Grasim reacting to its numbers, like we were just talking about. That one also down by about 1/10%. So we're going to see how the street is really penciling all the other numbers that have also come in and how they're going to be reacting to that. But maybe Ajit can come in on the likes of, we were talking about power, but if we just have to shift focus towards metals, because we're seeing a lot of those, numbers, a lot of those components on the laggard list today. And in fact, it was so even yesterday. But before that, we saw a good run up. So do you think it is that profit booking really that is taking place? So people have seen that there is, there are chances to sell on rise for a couple of these counters. How is one to be looking at them, and what are the stocks then that actually make sense within the metal pack?
So, Stacy, we have had a very strong run across the metal pack, and in the last study session, the commodity markets, the base metals and the bullions, they were slightly on the profit-taking spree, and that is what we are seeing in the stocks as well as today. But overall, if you talk about metal as a sector, I feel that we have more legs to this up move, and but yeah, one needs to be selective in this space, because the move in some of these names has been exceptional. So the stock like Henzing and Copper, they have done exceptionally well. At the same time, stock like Tata Steel, wherein we have seen a fresh breakout, and this is a marginal dip that we are seeing right now in line with the other metal majors. So it's a buying opportunity if somebody had missed the rally earlier. So 171 is currently its quoting at. So with stop at 167, one can go long in Tata Steel for 180 to 85 being the positional target. And apart from that, SAIL also looks positive to us. It's just that we are seeing some profit taking at the higher levels. It's trading closer to its record highs. So it might retrace to 160, 65, 160 to 158 zone before making any further up moves. So you utilize this dip to add both these names, Tata Steel and SAIL, in the metal space.
Right. So you can add Tata Steel and SAIL. Let's talk about some more PSUs, and I will answer a couple of queries that are coming in and get Ajit to answer them for you. Srivardhan wants to know view on BHEL. In fact, that one just came out with its numbers, and you had a whole host of brokerages that had a sell counter on it. So there is one on BHEL BHEL as well as another one on BEL and BEML. So maybe you can take all of those together and answer one each. But let's start off with BHEL right now.
Record highs, almost to the record high zone after 2007 in BHEL. And if you see on a quarterly basis, there's not even a single quarter negative or a month-on-month basis, just a couple of months negative for BHEL in the run that is started from roughly around 60 odd area. So I feel that now post numbers, there's a bit of profit taking that we are seeing. It's a healthy profit taking, and the stock should now witness some consolidation after reaching to its multi-year highs. And if the view is short term, so definitely I would recommend you to book profit. And if you have bought it at these slightly at the higher levels, then also you should plan an exit. Because if there will be any profit taking or a decline below 288, it might witness some serious profit taking to 260 or 250 area. So the risk reward is not favorable to hold BHEL at the current level. So at least book partial profit, or you may exit completely also and let the stock stabilize. Now coming to the BEML, the stock has been inching higher post numbers. There was strong base formation around 32,000-3,800 zone. And the recent surge is accompanied with very strong volume. So we feel that this momentum is here to stay in BEML, and your stop should be at now at 4,400 if it's a short-term trade. And since we are in the uncharted territory, one can continue to hold it and keep on trailing stop losses on rise. And lastly, BEL, we are seeing this momentum continuing across the defense space. HAL, BEL, they are trading at record highs. Volumes are still strong. So as long as the momentum is intact, one can continue to ride this. So for BEL, we feel that 280 is a strong base now. So that should be your immediate stop. And 300, 310, that could be your immediate target.
Right. I'm going to quickly get one more query that is coming in. Satya CK wants to know if you can get a long or medium term perspective and target for ITD cementation from a 1 to 2 year perspective, whether 700 would be a target rather in a 2 year perspective. So what would you suggest for him on this particular counter?
So this stock has done exceptionally well, in the last couple of years. The kind of move from roughly around double-digit mark to 400 plus currently quoting. But the past instances also, we have had very sharp swings in this stock. So just to put things into perspective, in 2006 it was at around 100, and then it reduced to double-digit mark, and a similar move was witnessed when it topped out in 2017 and around from 220 levels to 20 mark. So I feel that considering its the past behavior, you can continue to hold your longs positionally also from the medium to long term perspective, and now it should not come down below this 320 mark. So even if your view is, let's say, for 1 to 2 years, maintaining this level as a stock would help you to navigate in case if the stock trends reverse again. So otherwise you can continue to hold your notes.
Right, so you can continue to hold ITD cementation. Well, let's also bring our viewers up to speed with what the government is really cheering, because yesterday the RBI has gone on to approve a dividend of 2.11 lakh crore rupees to the government for FY24. Now, the RBI has considered this number, and remember, this is almost a 140% increase from the FY23 amount. So there's a lot to cheer, and in fact, that cheering, will go on to help the government, because this comes in the upper range of about 6.5 and by 5.5 to 6.5, that risk buffer that the government really keeps. Of course, this overall is going to perhaps bring down the government's borrowing, if at all they have to go by this number, because we are somewhere close to, in fact, the budget estimates were just around 1.02 lakh crore rupees, and we are coming, the RBI has come out with the dividend of 2.11 lakh. So that's a huge buffer that it has given the government, and enough reason to cheer. But overall, with the macros and this kind of the borrowings rather coming down, the India's fiscal picture rather changing, perhaps we could say, with the new government also coming in, how much of that is really going to play out when it comes to investors putting in their money into India? That's something that we're going to talk more in detail. And joining me for that is Sandip Agarwal. He's a fund manager at Sowilo Investment Managers. Thank you so much, Sandip, for giving us your time and speaking with us here at Moneycontrol. Firstly, how are you looking at this fact that yesterday, by surprise, we saw this huge big dividend coming in for the government, 140% hike from the FY23 levels that we are seeing. How are you really reacting to it, or rather, is this enough reason to see more FIIs also flocking into India?
No, so good morning and thanks for having me on the show. I really I'm positively surprised by the kind of delta which RBI has given to the center. We were at almost 1 trillion, and it is much ahead of at 2.1 trillion. And even last year, if you see, the actual dividend was much higher than anticipated, and this year same thing has continued. And remember, this is over and above the 6.5% contingent risk buffer which RBI has. So the message which RBI is sending is that they are ultra conservative on their side of the finance, and despite that they are able to give so much of cash in the hands of the government. So all these debates which have been in the past, that governments focus on capex led growth and leaving aside consumption led growth, or compromising some bit on consumption side of growth, or the argument that it is an either or scenario for the government if they want to control the fiscal deficit, that I think is now this move has actually given more generous and liberty in the hand of center to actually manage both capex growth and consumption growth, and at the same time maintain the fiscal discipline. So I think it is a very positive move, and I'm sure the FIs and even domestic large institutions would be monitoring it very closely, and they must be very happy and positively surprised with this move.
Right. In fact, we will address a couple of brokerages that have come out with their notes post the RBI's dividend announcement. In fact, they've said something that the likes of Morgan Stanley is saying that the transfer really scales new peaks. This higher dividend is a positive for the government in terms of their fiscal consolidation plan. They also see the fiscal deficit now could narrow to somewhere around 5.1% versus of the GDP versus the FY25 budget estimates, also which was at 5.8% versus the FY24 revised estimates that was at 5.8%. I beg your pardon. This could also go on to increase that probability of overall reducing government's borrowing, is what they have gone on to say. Nomura, on the other side, has said that this fiscal windfall is really something that is a positive. The RBI's record high dividend is likely to result in almost a close to 0.4% of the GDP fiscal windfall. Now, the risk of the slightly lower fiscal deficit, though, the target is in line with that final budget that will come out. So that is the word coming in from Nomura. They're also suggesting that there is a case for the government to do a mix of lowering its fiscal deficit as well as cutting borrowing. So which is what we could expect in the July budget, while they've also gone on to retain some of that windfall into the meat of its existency. So that is something we'll have to see how it really plays out. And yes, the budget is going to be an interesting time to be looking at this. But let's also look at a couple of other stocks that will be in focus. One that we could address is Nykaa. Now, this one quite interesting because it did come out with the numbers showing a profit of about 9 crore on a YOY basis. Revenues are up by 28.1%, coming in at 1,667. EBITDA too has seen a growth of close to 32%, where it's coming in at 93.2 crore rupees. Margins are up at 5.6% versus the 5.4%. Ajit, quickly your view on Nykaa, because today we're also going to see the likes of Honasa Consumers or Mamaearth come out with its numbers. So do you think there is enough and more reason to be looking at these, rather FMCG, but in that discretionary part of the FMCG play, and would you still suggest something like that, and your overall view on FMCG even considering ITC numbers today?
So yeah, FMCG in general is looking positive to us, Stacy, considering that we have had underperformance in the past, but now we are seeing some of these heavyweights doing their bit. HUL started with strong recovery. ITC was anyways holding strong throughout. Marico post numbers has done exceptionally well, and in fact we believe that this outperformance might continue, and similar tone is what we are seeing in Imami and both the CP as well. Now coming to Nykaa, I feel that after this period of underperformance and the sharp correction that we had post listing, it's a kind of like scenario wherein we are seeing base formation after these prolonged underperformance. The good part is that we are trading closer to the upper band of the breakout area of the same. So a close above 180 would fuel further recovery, and that may help the stock to inch toward 220 and 240 also. So those who are stuck at the higher levels, they may continue to hold. I feel that 165 is a zone where we have multiple supports. So until we break that mark, there will be a possibility that we may see strong rebound in Nykaa in coming weeks. So yes, you can buy fresh also. You can hold your longs, but a close above 180 would fuel the next leg of the momentum in the stock.
Right. In fact, UBS has also come out with a note on Nykaa. They're maintaining a neutral call at this point. The target is at 210. They say the Q4 numbers have seen an improvement in their GMVs as well as revenue growth, but the continued lack in operating leverage is what is going to be leveraged really. Now, growth trajectory they do see at for Q4 should continue into FY25 is what UBS is saying on Nykaa. In fact, another stock that came out with a rather positive set of numbers is Jubilant Food, and I'm taking this up talking about discretionary and FMCG and how these ones are really playing quite the positive at this point. We saw Jubilant come out with its numbers. Net profit is at 207.5 crore rupees versus just a 28.5 crore rupees, so quite a big jump there coming in for Jubilant Food in terms of its bottom line. Revenues are up by 23.9% at 1,572 crore rupees. EBITDA is up at 24% at 310 crore rupees, whereas margins have also seen just about flat, we would say 19.7 versus 19.6, but a good set of numbers coming in there for Jubilant Food. Now maybe I go back to Sandip this time and ask him his play on the whole QSR space. Most of them have come out with good set of numbers, seeing a lot of store increases at this point. Jubilant also, the numbers there looking quite positive. How is one to be reading not just the numbers but also overall? Are we seeing that kind of recovery at least when it comes to QSR?
Yeah, so I have a little different perspective on this. I think that these are the spaces which are going to do extremely well in the very long term because multiple levers are there. Our economy is doing well. The per capita income theme fits this kind of business a lot. So and also, as rightly mentioned by the previous speaker, that it has its own share of underperformance for quite some time. So I think now things should turn from here. And also, if you see the initiatives, the volumetric growth, the waivers they have done on the delivery side, the 50 and 25 store additions they're talking about in the new offering, all these things are going to do extremely well for them. I believe that if someone is taking 3 to 5 or 10 year view, then this is a space where you can make substantial amount of returns. Obviously, these spaces are directly related to economy, so any problem in the economy, it shows up in the numbers with a lag effect, and the vice versa is also true. So I would believe that Jubilant is probably at the fag end of underperformance, and from here it should start doing well. That is the way I look at it. And even the whole QSR space is a long-term good story for India. High growth country with high working population with high per capita income. So all this is what you need for this kind of businesses.
Right, and since we're talking about these discretionary spends, there is a query that has come in on Asian Paints. So maybe I'll ask Ajit to address that. Ajit, how is Asian Paints, or rather the charts for it? What is it telling you at this point? Is there a good entry point, or one should hold on? What would you suggest?
So I feel that this the entire paint space, we are seeing signs of bottoming out. Because if you talk about Asian Paints, since this 2021, we have been seeing the stock hovering in this band 2700, 3500, and of late we have tested the lower band of the same, and we are seeing that strong buying interest emerging again from those levels. Plus the crude, which was hovering around $90 a couple of weeks ago, has again cooled off, and we feel that that's the major bidder for the paint companies now. So we feel yes, you can continue to accumulate the stock in this range of 2,900, 3,000, and gradually it can inch towards the previous high and probably this time new high as well.
Right, so that is the suggestion coming there on Asian Paints. Well, let's also speak about a couple of other, since you did mention about how crude has cooled off now, we are seeing a couple of other global headwinds also that have eased really in terms of, yes, the wars are still raging on, but there are talks and negotiations that are taking place, and that has somehow kept the global markets also a little bit, upbeat, we would say, in these past few days. Sandip, to you, last night we saw the Fed minutes and perhaps Wall Street not really reacting in the positive way because they did come off their highs. But the Fed is now taking, or rather the minutes suggest that it will be that higher for longer approach that will continue. Do you see that really going on to impact anything for India and the markets here, or is that something like the elections? Is that also something that is already factored in here for us in India?
So yes, higher for longer is something which is looking most likely situation right now, and with the commodity basket X of crude going up so sharply, particularly on the metal side, it seems that there are still challenges, and we may not be able to see inflation pulling off as quickly as we were expecting. So, and if that happens, then obviously Fed will not be in a hurry to cut down the rate. So I think higher for longer is the new norm, and I think broadly markets have also started building it in. Obviously, any positive surprise on that front will be a welcome move. Coming to India, I think we are now not so much directly intervening, in the sense that the gap between our interest rate and the US interest rates have come down substantially in the last few years, and because of that, we are not now seeing the direct impact so much. So I would say that yes, higher interest rate obviously is a brake system, basically control system, which is used to cool off the economy to a certain extent to bring down the inflation within the broad parameters. But at the same time, I think that given our domestic good growth and our good tax collections, our fiscal discipline, all those things will allow us to have little more liberty on that front, and we may not be hurt as badly, or we may not suffer so much as it is being anticipated. So I'd be happy if interest rate cuts happen, but if they don't happen, then I'm not very disappointed, honestly.
Right. So may or may not happen, but won't really change or really move the needle much, at least for the Indian markets. I'm quickly going to try and address two more queries. So Ajit, maybe you can help Debu K. He wants to know your views on Power India, and we did speak about the whole sector just before this, but this particular stock, what would you be suggesting to Debu K on Power India?
So, Debu, I would suggest you to book some profit, because the kind of momentum that we, had in the stock from 55 to 12,000 marks. So it's normal to witness some bit of a consolidation of profit taking. That is what we have started seeing now. And this pressure may increase if it fails to hold 9,700 mark. So at least book partial profit. If you're planning any fresh trade, one should wait and let's see the stock stabilize. So maybe closer to around 9,000 to 9,500 could be the zone where it might take a breather next.
Right, so that's what you're suggesting. Ajit, any other stocks that are on your radar specifically, and we'll let you have the last word, because what would you be suggesting today, being the weekly expiry as well? What is on your radar?
So from a couple of names which I like from the heavyweights, because Reliance, after a long period of underperformance, have started seeing some traction, Stacy. So we can see fresh bout of buying if it manages to cross 2960. So traders should keep a close eye on Reliance now for fresh long, and then there's a possibility that we might see a newer high in Reliance. Another stock which we like is L&T. We have seen very strong recovery in L&T. The stock has reclaimed its short-term averages also. So again, if the view is very short-term, then one can look at L&T also. And lastly, Marico from the FMCG basket, where we are seeing consistent traction. The stock is trading, it's closer to its record high. There's margin consolidation also, which is offering a fresh buying pivot. So yes, you can consider Marico also for the long trade.
Interesting picks there. You are looking at Reliance, and in fact, that one did push the benchmarks yesterday as well in trade. He's also suggesting Marico. I'm completely out of time here, so I'm going to have to thank both my guests, Ajit Mishra as well as Sandip. Thank you so much for giving us your time and speaking with us today and helping our viewers with their queries. And also to all our viewers, do keep writing into us, and we will try and address them. If it's not today, don't be disheartened. We try and get them onto put your query there on our live feed, and we'll try and get them answered by our experts. But before we go, let me also address the IPO that is hitting the bourses today. There's Go Digit General Insurance, which will be listing its shares on the bourses today. The issue price, remember, has been fixed at 272 per share. Remember, this is that Anushka and Virat Kohli backed company. It did see a lot of interest when the issue was open, so we're going to see whether it lists with a premium or a discount. Going by the grey markets, it does show that it could see some good momentum, at least at open, but the market sentiment really needs to give that kind of energy or rather momentum. But for now, it's a wrap. Thank you so much for watching. Do keep sending us your feedback on the comment section below. But for all your other updates, come back to moneycontrol.com as well as the Money Control app.